Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Tuesday, November the 29th, 2016. For those of you who may have missed it, check out my latest interview with the Guerrilla Economist that took place earlier today. You can check that under the playlist 2016 interviews here on my YouTube channel. You can peep it there. We had a really good talk discussing a few things that's been happening in the markets, and we'll get into some of that, touch on it in this video. The first thing I want to talk about is oil. Looking at this petrodollar schematic, notice how it's been having the roughest time with 50 bucks. It's every time it gets anywhere near it, it just falls apart. Now it finds itself in a negative pulse wave situation, and we are in a bear market according to the trend lines. Okay, if these trend lines drop outside below this Kumo cloud, it's a wrap. It's the beginning of a bear run, a bear market. You could even make that argument now, but we've been elongated here in a sideways channel within the Kumo cloud, in and out of the cloud. So it still remains to be seen if we're going to get some pickup in momentum to the downside. But we are in a negative pulse wave situation with a possible trend change in the charts here, and that's not a good thing if you are bullish the oil right now. Overhead resistance is at $49.20, and here we are at $45.22.5. So this is really interesting. So basically, what you're looking to do here, if you've been following, the pulse waves, you want to keep in mind the short side of things, and you also want to keep in mind your inverse ETFs, such as your DUG, DUG. Let's take a look at DUG. See what's going on here with DUG. All right, as you can see, DUG gapped up nice from the prior close of 42.44. It gapped up today on the open of 43.60, and then kind of like lost a little bit of steam. It does have overhead resistance at 44.96. A break above that could help push this closer to that 48 handle, and that's the initial target for this right now, depending on how the futures pick up in momentum and downside momentum. If that happens, then it's a wrap. Right now you have support for this move at $40.75. So that's where we are right now with this move. Momentum is trying to turn up here, so this is definitely one to watch. And this gap does have to be dealt with, though, before moving higher. I think it'll probably be filled around the 42.47 level before taking off higher. Chances are that you'll probably see that tomorrow. Maybe a little bounce coming in the futures in the overnight and extending into tomorrow could help fill that. If not, then this is going to be off to the races if the oil continues to fall. So watch DUG. DUG is definitely in play. All right, moving forward, let's take a look at what's happening in the NASDAQ. Very important here. Okay. You've heard me say this before if you've been with me for a long time. You need certain indices to play if this is going to be significant in one direction or another. Back in 2007, the indices were hitting new highs with the exception of the NASDAQ. The NASDAQ did not participate. So a lot of times the NASDAQ can lead the way in either direction. In this case, the NASDAQ is still strong. Okay, it paused yesterday and then tried to break out again today. So the trend lines are within the Kumo cloud, which is not good. They need to come out of the cloud, or we're going to break out or break down. Chances are it can elongate and stretch out here and remain in the cloud. That would keep prices suppressed and not be able to sustain a rally or even really get one going until after these trend lines come out of this Kumo cloud. So we need to either break down or break up or do something. So that's where we are right now in the NASDAQ. But one thing I wanted to show you is the Russell. The Russell sometimes leads the way as well. And right now the Russell is breaking down. Okay. So is it just testing the trend line here? It does have support at 1294.60. But if that breaks, then the next support is at 1253.20. And that's a long way down. And then below that, we got a little slight air pocket and a thin layered cloud, which prices can easily slice through that like a hot knife through butter. So this is one to look at. But on the flip side of things, look what the Russell did. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 up days in a row. This has to be a new record for this. I don't think I've seen this in quite a while. 16 up days in a row. That's incredible. Which means that this thing went from 1172.90 all the way up to 1348.20. That is phenomenal. This is just straight up, like just take off, going from liftoff. That is spectacular. All right, and then you even had here, you had a pullback. So technically, the bounce, the first breakout came break level of the 1172.90. Then you had another one at 1123.60. So from 1123.60, you go to 1348.10. Absolutely insane. Can this sustain some kind of a pullback? Absolutely. And it might just do that. But remember what I told you before too. At some point, the pointer has to be reckoned with. This low at some point will be taken out. The question is it going to be sooner rather than later? You would want it to be sooner and not later. Because if it's later, that means this has potential to go way higher first before coming down and testing this, or even besting it before reversing back up and hitting new highs. So before any real thing can really take off here, new highs and stuff, this right here, these lows have to be reckoned with. So I hate to say it, but this is in jeopardy. All right, taking a look now at the Dow. I know people don't like talking about this, but we have to deal with it. And I'm not calling for a crash. That is just, it is not even a correction. It's just dealing with a technical aspect built within the algorithms that dates back to no, I take that back. This started back in 2000. This algorithmic type of play started back in 2000. So I take that back. So anyway, these pointers are going to have to be dealt with. Now the Dow is not breaking down like the Russell is. It's hanging in there. But nevertheless, you still have to deal with this. This is a long way down. People don't want to deal with this, but you got to deal with it. When it happens, you're going to have to be nimble because it's going to come right back up. It's just going to come down and test it. It may even best it. I don't know if it's going to break through it or not, but at some point it's going to test it before we really see Dow 20 and 30 and 50,000. All right. Next thing on the menu, let's look at the GDX. Let's pull that up. All right, looking at the GDX. As you can see, it is bearish. Trend lines are pointing down. They're below the Kumo cloud. Momentum is kind of flat. Even though you've had some up days, they run the risk of being shorted and sold. Is the greed factor going to kick in and they allow it to get up to the trend line resistance of $22 before hammering it back down again, or is it just going to be sold anyway? It's hard to say. Have we hit a bottom? You can make an argument that here we are. We had a low here of 2013 and a low here of 2014. It came within a penny. So you could make an argument that the lows now are in for the GDX. Let's look at the GDXJ. All right. A little bit different picture here. 3280 support. 3345 is what we got. So not quite, but still looking like it's forming that base, right? Not as clear as the GDX, so we'll have to watch this one. But are we looking at the possible breakout and testing the bottom of the Kumo cloud? That's a good question. Good for a $7 or $8 run to the upside, but we could also break down. Definitely have to keep an eye on these. Let's look at your JNUG. All right, JNUG is just right on point. Same pattern as your GXJ, just like it should. Same argument. Flat line on the momentum though. Doesn't mean it can't explode in a moment's notice, but this could be a good time to start accumulating those mining shares. Let's look at JDST. JDST is hanging on. It's sideways, but it's picking up on the selling. You know, we topped out here, we got sold here, still dancing on the trend line support here, but if this trend line support of 3049 is taken out, the next support's at 3282, and then we got a little air pocket to the Kumo cloud down here at the 29 handle, and this is a thin cloud, so it could cut right through this easily. But then we have next support is going to be down here at the 2280 level, so it's just hard to say. All this stuff is contingent upon this right here. What is gold going to do? Well, let's see. Trying to lift off here, all right, but this low of 1182.60 is below the 1184.40, so we took out this low, didn't close there, but still nonetheless took it out. Momentum pointing upward on that, but I still suspect this is going to be sold. Will they let it get to the trend line of 1225.80 first? I don't know. I don't think so. I think they're going to sell it, just because again we've seen this before. All right, this rally was sold. This rally ended up getting sold. This one got sold, and then today selling, but it didn't close there. So kind of like selling, kind of like died off a little bit. But that doesn't mean that you can't get one of these. It did here too. In the next session, the next two sessions, look what happened. So taking out 1170.30 is a real big deal in the gold right now. 1170 needs to hold. If it does not hold, we're going to 1150 easily. All right, so this is a big deal. This will determine what happens in the junior mining space as well. People don't like to show that cause and effect relationship, but nonetheless it's there. All right, because what do the miners do? They're mining. This is their product that they're mining. So the value of this product dictates a lot. All right, so here it is. All right, this here is what's causing and leading the way. When this starts to explode, then the mining shares will go right along with it. As long as this is depressed, then the mining shares are going to be depressed too. Let's take a look at a couple here. Someone asked me about. Let me see if I can pull it up. Let's see. What is it? Let's just look at. That's not the right one. Let me see. All right, Gold Corp. Let's look at Gold Corp. All right, see, it's looking like the gold chart. All right, it's looking like the gold chart. We got gaps. You can make an argument that this gap was filled and now it's getting ready to be shorted back down again. It's just tough to say. We got to let the price action lead us. It could go either way right now, just the way that the momentum and everything is moving. And this is Gold Corp, by the way. Let's look at it now. Let's look at AG real quick. All right, just totally flat. Just nothing going on for days. Just in this elongated, consolidated situation and a negative pulse wave, but not hitting any new lows. So not ready to do anything yet, but should be watched. All right, let's look at Pretty Ricky. All right, Pretty Ricky, same scenario, bouncing around here, making you think that we may be building upon finding some support. Let's see, the low was at 615. We came down here and got to 625. So came within a few pennies, but not doing it. Now it's trying to get back higher again. Negative pulse wave, bear market on the daily chart. But here's the thing, though. Let me show you this. This is that weekly chart, man. This is that weekly chart. And here's the ramp. We are here. We are here. So, can we head fake and have a final washout below the cloud only to spring back up and then take off like a rocket on the ramp? It's yet to be seen. I'd like to see that. So this is definitely one to watch as well to see how we play out in these markets. All right, someone asked me to take a look at Silver Lake Resources. So here it is. Ticker symbol is SVLKF. And on the weekly chart, it's in a negative pulse wave situation, but the bull market positioning is still in place. Trend lines are bullish, the Kumo cloud, and you do have some ramps coming up in the Kumo cloud. And the momentum's kind of falling off, so it could come back down toward the trend line here of 35 cents. So that's kind of where you are with this on the weekly chart. But again, my rule when it comes to stocks trading below $5 a share, especially stocks that are below $1 a share or $1 a share. I mean, it's a win-win because what's going to happen with these mining shares? When it comes to gold and silver miners, unless the company's going to go out of business or something, and the stock goes to zero, I mean, what's the most that you can really lose with something that's trading at pennies a share? So buy as much as you can and just hold these. You don't even need a stop loss for trading a penny stock. When it comes to the mining shares, like I said, you have a lot more flexibility when these shares are below $5. The most you can lose is, on 100 shares is $500. I mean, so come on. What are you gonna do? If you get 500 shares of this, come on. It goes to zero. What are you gonna lose on a stock that costs $1 and you buy 500 shares? The most you can lose is $500. So it's not like you're losing tens of thousands of dollars. You could sit and hold that, and it's not a big deal. And if the stock goes to $100 a share and you got 500 shares, well then you do the math. All right, so it's not a big deal. This one is trying to look like it's getting ready to play and get bullish. Just have to watch it and see what can come of it. Okay, last but not least, looking at the US dollar situation, you can see on the weekly chart it hit 102.12 and now currently it's at par 98. So it's come off a little bit here. So support right now for the week is at par 03. So as long as it can, close above that, it's still maintaining its bullish makeup here. And this is the weekly chart. Let's look at the daily chart. All right. Okay, on a daily chart, you're dancing around these supports, and you've topped out for now. Doesn't mean it can't take off higher. Bullish position on the chart is obvious; it's still there, but it doesn't mean it can't correct. So definitely watch this one. Definitely, if it breaks down, especially if it drops below par, then that's just all she wrote. So remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can, give nothing back, and come on over and visit us at pulsewavetrading.com. Sign up for the premium trading room where you get access to the weekly price wave, post wave price trigger, so that you can make some money and learn how to trade these markets and provide for you and your family. Be encouraged, and also get ready for the academy that will be coming in a couple of weeks, Lord willing. That's all I got. A break above that could help push this closer to that 48 handle, and that's the initial target for this right now, depending on how the futures pick up in momentum and downside momentum. If that happens, then it's a wrap. Right now you have support for this move at $40.75. So that's where we are right now with this move. Momentum is trying to turn up here, so this is definitely one to watch. And this gap does have to be dealt with, though, before moving higher. I think it'll probably be filled around the 42.47 level before taking off higher. Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Tuesday, November the 29th, 2016. For those of you who may have missed it, check out my latest interview with V, the Guerrilla Economist, that took place earlier today. You can check that under the playlist 2016 interviews here on my YouTube channel. You can peep it there. We had a really good talk discussing a few things that's been happening in the markets, and we'll get into some of that, touch on it. And we've been elongated here in a sideways channel within the Kumo cloud, in and out of the cloud. So it still remains to be seen if we're going to get some pickup in momentum to the downside. But we are in a negative pulse wave situation with a possible trend change in the charts here, and that's not a good thing if you are bullish the oil right now. Overhead resistance is at $49.20, and here we are at $45.22.5. So this is really interesting. So basically, what you're looking to do here, if you've been following the pulse waves, you want to keep in mind the short side of things, and you also want to keep in mind your inverse ETFs, such as your DUG, DUG. Let's take a look at DUG, see what's going on here with DUG. All right, as you can see, DUG gapped up nice. From the prior close of 42.44, it gapped up today on the open of 43.60, and then kind of like lost a little bit of steam. It does have overhead resistance at 44.90 in this video. The first thing I want to talk about is oil. Looking at this petrodollar schematic, notice how it's been having the roughest time with 50 bucks. It's every time it gets anywhere near it, it just falls apart. Now it finds itself in a negative pulse wave situation, and we are in a bear market according to the trend lines. Okay, if these trend lines drop outside below this Kumo cloud, it's a wrap. It's the beginning of a bear run, a bear market. You could even make that argument now, but